Now, when it comes to Bitcoin, you know by now if you tune in on a regular basis, which you should be, and if you're not, then you definitely should. But you know by now we talk about the price is probably one of the least interesting things about Bitcoin. When you're looking at new technologies, you should be looking at the growth of the network, and you should be looking at the development on the network. So I typically like to focus on those things, but you know, people care about the price as well, and so sometimes I like to talk about that. And I've made the last couple of weeks I've been talking about, you know, how all of these purges in the Bitcoin ecosystem through the, you know, Terra Luna collapsing and Celsius and Three Arrows Capital. We've covered all that at length. But I also started talking about how at these certain levels that Bitcoin starts to become very cheap, and how at these levels it becomes a historic buying opportunity. As a matter of fact, I put a video up on my YouTube channel. If you're not watching that, you should. Just search Mark Moss on YouTube. And I had a video full of charts and graphs and stats and numbers and everything showing why I thought it was the Bitcoin bottom. And it looks like that might be the case. So we hit a Bitcoin, well, the lowest point we've had recently was about 17,600. And today we are up to over 23,000. So that is a 31% increase. Since, what was the date on that? June 19th. So about a month ago. We've done pretty good, 30% in a month. So a lot of times people like to ask me, oh, how's that Bitcoin doing for you? And they ask that sarcastically because they know, right? It was 60, whatever. If you want to look at the wick of the high point, you know, we were up somewhere in the 69,000 range. Back in November, there was a little wick up to just over 69,000 back November 11th. And so obviously it's down since that point. And so everybody goes, oh, how's that Bitcoin doing? Huh? It's some store of value, isn't it? And I would say, well, yeah, how is Bitcoin doing? How is Bitcoin doing? Well, let's see. It's down 50% year to date. How's that compared to Netflix or PayPal or Shopify? Right, so it's much better than those. Thanks for asking, right? Or I could say, well, it's up 30% in the last 30 days. Right? So what time frame do you want to look at it? How's that Bitcoin doing? Well, let's see. Since in the last 2 weeks, it's up 28%. Thanks for asking. Yeah, but it's down 65% from its all-time high. Okay, but it's also up 450% in the last 24 months. So we can sit here and we can cherry pick any dates and time frames that we want. And that's why the price is one of the least interesting things. What we want to look at is the development and the growth of the network. The network growth is everything. Now, but anyway, that's the price. So we can see because the price of Bitcoin has rebounded, we are now at about 65% off of its all-time high. Now, it had drawn down even more than that, and it's a little bit important to understand for a little bit of reason. So it had gotten as low as 74% off of its high. So it was down to 64%. Now it's about 66% down. The reason why it's important to understand that maybe is as I made this video on my main YouTube channel, Mark Moss, and I showed these charts and graphs and things like that. And one of the things that we look at is how far is the drawdown. So what we see is that Bitcoin had a 95% drawdown, and then an 85% drawdown, and then an 80%, and then it's, and each drawdown gets less and less and less. And so yes, we had a 74% drawdown, but that was much less than the ones before that. And the reason why that's important is that they're getting less and less and less. As the asset gets older and bigger and more developed and more users, it gets less, has less drawdowns, it gets less volatile. And so that's what we're seeing. And so it's important to understand it from that perspective. Nobody has a crystal ball. I wish I did. It would sure make things easier, and I would probably be the richest guy in the history of the world, but of course nobody does. And so we look at a bunch of charts, graphs, and things like that to try to come up with what we think are probabilities. And then we invest along with those probabilities. And so I see a lot of linear thinking in the space, and it's like, I would never buy Bitcoin, it's going to zero. And I'm like 100%, you're guaranteed 100% it's going to zero. Or some people would say, Bitcoin's going to be $1 trillion. And it's like 100% guaranteed. Right? Like, no, it could go to zero. I will agree with you. It's possible it could go to zero. But what's the probability? What percentage chance would you give it of going to zero? It could go to $1 trillion. but what probability would I assign of it going to 1 trillion? So you have to think about it in terms like that. Now, I've worked through the math. I'm not going to go through this, but I think that Bitcoin could achieve easily a $2 million per Bitcoin price. At today's $20,000 valuation, that means the market gives it about a 1% chance of getting there. Well, I think it's higher than 1%. So I think the market's misjudged it. And so that's the way I think through this. But like I said, it doesn't stop people from trying to think through this. And we have all different types of analysts. Some are still calling it for it to go to $10,000. It hasn't gone to the bottom yet. And some are saying it's going straight up to $125,000. But of course, we don't know that. One thing we do know is that we can just see how it's moved against other assets like the US dollar index, the DXY. And it's been sort of inversely correlated. What does inversely correlated means? Well, that means that it does the opposite, right? That's the best way to think about that. And so as the dollar's been getting stronger, most risk assets, including the NASDAQ, et cetera, have gotten weaker. And what we can see is that the dollar index has dropped off quite a bit. From July 14th, we're down about 2%, which doesn't sound like a lot, but the dollar index doesn't move a whole lot. So maybe the dollar index moving down has a big effect on Bitcoin, as it says it does. I mean, that's what people are speculating, and sure enough, we can see the dollar index has come down off of that. We can see that also, though, that risk assets. So when I talk about risk assets, I'm talking about both like, the NASDAQ, which are the tech stocks, and I'm thinking about Bitcoin. They also tend to move in front of traditional assets like the S&P 500. So when the Fed announced that they were going to start raising rates and start tapering, Bitcoin and the NASDAQ, the tech stocks, sold off right away in November. But the S&P 500 didn't make its high until January. So maybe both with the dollar index, with the dollar index going down, but then more specifically with the NASDAQ and Bitcoin both catching a pump, maybe that's telling us something. Maybe that is this canary in the coal mine, so to speak, because the NASDAQ also made its low about 2 months ago, and the NASDAQ is up 20%. So the NASDAQ, the risk assets, the tech stocks, they're up 20%. Bitcoin's up 30%. It's more volatile, so it moves faster. So we're seeing both risk assets being the NASDAQ and Bitcoin both pumping. Meanwhile, the S&P 500 is doing okay. It's up almost 9% in that same time period. But we don't know. So far, it's up 30%. I think we might have seen the bottom of Bitcoin. I think it could continue higher from here. Probably not going to the moon overnight, but I think it's a good entry anytime we get around these price levels, and so far it's holding up. And, there's a lot that catches my eye on a weekly basis. There's definitely no shortage of news out there. And as I've said before many times, with new technologies, we don't look at the price. We don't want to look at the price. That's boring. We want to look at the development and the growth of the network. Now, we've talked extensively about the growth of the network, the amount of wallet addresses that are opening up, the hash power on the network, things like that. But I also like to look at the development on the network. And there is no shortage of development that's happening on top of Bitcoin. About 2 months ago, I think it was, or maybe it was a month ago. I'm losing track of time. Maybe it was about a month ago. In Austin was Consensus. It's like the largest crypto conference. And Jack Dorsey, who's the founder of Twitter, he left Twitter to run his company Block, which is a Bitcoin company. He said he's going to spend dedicate the rest of his life to working on Bitcoin. I suppose he could change his mind, but that's what he said. Anyway, he made buzz by announcing what he called Web 5. It's kind of like this meme. But basically announced this new company he's working on that has these things called Decentralized Ids. So what that means is that we all have an ID. You have your driver's license. When you go to the bar or you go buy alcohol at the grocery store, for example, they want to see your ID. What they really want is they want to know if you're over 21. They want to know if you're legally able to buy that alcohol. They don't need to know your birth date. They don't need to know your address. They don't need to know any of that. The only thing they need to know is if you're over 21. Now, The part of a decentralized ID is that I can own my ID. What's happened when we got on the internet is we've exposed even more of our personal data. So, for example, what we saw with Web 2 is that I could start logging into websites with my Google ID or my Facebook ID, for example. Now, that's nice. That's convenient. It sure is a pain in the butt having to create user profiles on every single website you go to. I hate it. What do they need all this information for? Can't I just use the stupid website, right? So it's a pain in the butt. You have to make different user accounts, different passwords. By the way, always use a unique hard password for everything. It's super hard to keep track of it, so I use something called LastPass. It's not a sponsorship. I don't get paid by them, but I use it, LastPass, and it creates a new hard password for everything, and I can log in with my phone or my computer, whatever. Anyway, so I can log in with my Facebook or my Google ID, but then they give them all that data, and I don't own that ID. Google owns that ID. Facebook owns that ID. So back to this announcement. So Jack Dorsey's company has these decentralized IDs, and that means that I could own my ID. And I keep my ID, and then if I want to log in and I want to show you my ID, I would only show you the information that you're requesting. So back to this proverbial buying alcohol at the grocery store. Instead of handing you my ID, where you can see my address and my birth date and all those things, the only thing you're seeing is if I'm over 21. And I can control that. The other benefit of that is that when I own that ID, it references to me. So let's say, for example, if I want to move, I got to go change my mailing address. And I got to notify all these people of all my new address. But what if I just changed it in my own ID? And then when people mailed stuff to me, they just queried my ID, and they automatically got updated. I could control that. See, right now I have to update everybody because in their databases, my ID is in thousands of databases. I have to go update thousands of databases. But they could just query my one database and I could own it. That way, if let's say Twitter shut me off, well, all of that information that Twitter had on me, I owned it. So then I could just go to a different platform, plug it in, and I could have everything back. So for example, if I log into Netflix and you log into Netflix, we see different things, right? Because Netflix has learned like my taste and it's learned your taste. And let's say that I leave Netflix and go to a different competitor. Well, then I have to start all over and I have to like stuff and dislike stuff. And eventually it builds that profile. But what if I could take that whole profile with me? And that's what I'm talking about. Now, why am I telling you this whole story? Well, I'm telling you this whole story because for this decentralized ID to work, they need to take that ID and they take a hash and they need to hash it somewhere that it's secure and decentralized, and it can't be manipulated or deleted. And so they're putting that into the Bitcoin blockchain. Now, what the heck is Bitcoin? Well, Bitcoin's a lot of things. We don't know everything it's going to be yet. What we do know is it's a new set of building blocks that allows us to build new things on top of. Now, we don't know what those new things are that it's going to be built on top of. Just like when steel was invented, steel was a technological revolution. We didn't know that one day spaceships would be built using steel. But we knew that we had a new set of building blocks that new things could be built on.